Hey, I'm Ed Parcaut, your host of Real Estate Jerky radio show and these lives that we do on Tuesdays and Thursdays at 11 a.m. Today, we're doing a little different. I wanted to kind of know where the future of retail space is going in the United States. And I met Joe Caccamo. Did I get that right today? All right, thank you. At an event, I don't know, a month or so ago, and we started talking, and I said I wanted to have him on the show to talk about, at the time I would say commercial, but really we're talking about the retail space and I know you specialize in a certain part of it, but can you generalize talking about what you see going on in the space right now?
Sure. So I'm with a San Francisco headquartered investment brokerage firm that specializes in the sale of retail properties, but I have a background in leasing and tenant representation. So I really see the whole spectrum of the market. And we're seeing interesting times, obviously. Everybody knows the pandemic just absolutely crushed a bunch of retailers. It was sort of the great magnification, showing what was under the hood, if they were strong, had the right concept that people wanted was viable, had an omni-channel approach, meaning a good interaction with an online presence. Those guys survive. There's a lot of formats that it just doesn't make sense in today's world. They were declining before the pandemic, and the pandemic only exacerbated things.
So it's pretty much sped up a process that was already coming, is basically what you're saying.
Yeah, I mean, the term retail apocalypse I think I've been hearing that term for at least 10 years. And every year we say, oh boy, when's it going to happen? And continue to be surprised about the vitality of certain retailers. In my airspace, we're definitely seeing a shift in terms of what investors want to buy properties. They want to buy leaning more towards what we call essential goods and services type retailers, such as auto parts stores and Starbucks and Chipotle's and the convenience stores. And they're shying away from some of the more traditional retail formats like clothing, which really, clothing is a real challenge because there's so much of it online, and it's so easy to buy and return online that people aren't getting out to the traditional malls like they used to. But they still think of it, anything you really need to go and get in a pinch, gasoline, coffee, food, anything that has a drive-thru is doing exceptionally well right now.
Now, I don't think a lot of people realize, but not every place that is a type of like a Burger King or those things, does that company own the space? Somebody actually owns it and leases it to them, right? In a lot of situations.
I would say in most situations, McDonald's being the glaring and well-known exception, own most of their real estate. But a lot of these companies, they fuel their growth through a network of what we call merchant developers who are going out, finding the space, building the property to their specifications. And then what they do is have me turn around to the open market and sell that leased property as a passive investment, if you will, to a host of people, of entities, whether it's a private individual in a 1031 exchange, buying a Dutch Bros coffee site in Utah, or it's a pension fund or chartered funds who've gone out and raised a bunch of capital to buy properties.
And most people wouldn't realize that. All right. So right. And so we're seeing, all right. So I know, like in my area in the commercial space, a small, if I was going to buy a building to move my company into, those are still doing well. But a lot of the larger buildings that are much higher, those are not doing well at all. I know your office is in San Francisco. You live in Santa Monica, and then you go also to, where is it?
Long Island.
Long Island. That's not how you say it, but anyway.
Long Island.
Gotta get that
There you
accent
go.
in there, man.
There you go.
Yeah. Anyway, so I know you know the country because you're all over. So why don't you kind of just give us what you're seeing and what do you think if somebody was going to go and invest? I'm not saying give advice, but you know what I mean. Someone can say, "Well, this is what I'm
Sure.
seeing, and this is do what you
Well,
can." Explain
well,
to
I
our
think
viewers.
if I had Superman powers and can fly up over the United States and have an aerial view, I would see like the old pioneers on the Oregon Trail, except I would see them heading in the opposite direction out of California, out of New York, and into growth Sunbelt state markets. Dallas is blowing up. Nashville, if you look up in the sky, it looks like something out of Star Wars, with all of the cranes in the sky. It's just absolutely going crazy there.
I have a question. So Nashville,
Sure.
in anything and everything going well. What's being built? Just buildings? What's being built there? You said
Built, I can't speak as much. I know the cranes are not all retail. Okay. They don't really necessarily need cranes to build a strip center. So I think they're building multifamily high-rise complexes to manage all of the growth coming into these markets. Dallas has been like this for, it seems, 30 years of just really hot growth. Nashville is the prices. I talk to people in Nashville trying to buy a house, and they say it's ridiculous. Everything's got multiple bids over asking. All this translates into anytime there's a great housing market, there's going to be a great, traditionally, a great retail market, because the retail supports the housing. So we're seeing everything. Florida is, Miami in particular. I know that during the pandemic, half the people I know in New York City moved down to Miami, and a lot of them are staying. And so there's been a real resurgence in that market, and people are looking at Miami as going to be one of the great capital markets over the next at least 10 years. So basically, anything along the I-10 corridor, which cuts across southern United States, is seeing a lot of growth. That's a lot of housing starts, and that's creating challenges also for retail construction, because the retail developers are competing with the housing developers for labor and materials, which is all going through the roof. So we're seeing less properties for sale, more demand, and therefore higher prices right now.
All right. Before we get going, we had someone asked a question, and can you see it on the screen there? So people lease the ground to build their businesses on. Basically, that is correct, right?
The people lease. Basically, developers will buy the piece of dirt, if you will. They will construct a building on it. They will lease that building to a tenant. The tenant says, okay, I agree to pay 15-year, 20 years, guaranteed rental stream. If you build the building to my specifications, the developer builds that building. The tenant says, yep, it's just as I wanted it. We sign off on it. And now that developer will typically turn around and sell that leased investment to the investor. So if I'm buying a new Starbucks in Huntsville, Alabama, it's typically going to have a 10-year lease. So I've got guaranteed income for 10 years, and they pretty much handle all of the maintenance issues. So I kind of just kick back and collect my fixed income stream over the next 10 years.
But it usually has to be a large company that is going to lease that space, because you're guaranteeing it for 10 years, right? Or you're guaranteeing it for 20, because most people, like a Starbucks or some of those places or a like a Burger King or whatever, they're going to say, I'm going to be here for 25 years, right? That's normally what they say they're going to lease that space for, or no?
Correct. I mean, it's a guarantee. The lease is a guarantee of performance. And then you have to determine, well, who's backing up that guarantee? Is it a franchisee of Burger King?
Right.
So what does their balance sheet look like? Versus is it corporate? So as an investor, when you're looking at this, you're buying this property with this income stream, one of the elements you want to understand is who's guaranteeing the performance of the lease. Because if it's a 2-unit operator and somebody gets sick eating one of their sandwiches and their business plummets and all of a sudden they can't meet their rent obligations, then you could get stuck with this building and trying to scramble to find another tenant to take it over, which might require you to spend money changing the building to that other tenant's needs. So you really want to look at who's guaranteeing the lease.
What I didn't realize, though, what you're talking about right now is the fact that whoever's going to build it, finds and sells that to somebody else, right? And then that you have like 3 parties in this transaction. The person's going to lease it, the people are going to build it, and then someone who's going to actually take the check every month for the rent and pay the payments, right? So I was always thinking that, whoever developed the space, they owned it forever. I didn't realize they sold those types of instruments all the way through.
Yeah, I mean, there's a whole world of, again, what we call merchant developers who have the relationships with the tenants who build, but their game is, it's going to cost me X amount of money to build this, and then I want to sell it for a profit. I want to turn around and sell it on the market for a profit to a passive investor. So it's just all about arbitrage, a yield play for these merchant developers. And, some of them are fortunate to have great relationships with high growth companies where they're building 50 Dutch Bros coffees a year now and, making a nice margin on those, while at the same time, the investor feels like, hey, I'm getting a great investment, a really nice yield here, nice place to park some money.
Are these institutional investors or individual investors or all over the gamut?
All over the place. And typically on what we would call more of an entry level investment, like a Dutch Bros, which, might cost $2 million to buy this brand new Dutch Bros coffee with a brand new 15-year lease in place. That entry point, you're going to see a lot of private investors, people trading out of an income producing residence. They're tired of dealing with tenants and phone calls in the middle of the night. They want to move to a real passive vehicle where they just collect the rent check every month. We see a lot of that migration to that kind of property. But then when you're dealing with a $40 million shopping center, that may price out a lot of the private individuals, and you get into more of sort of the funds and REITs, more sort of institutional type investors.
Okay. And Wendy wanted to say thank you for the information. She totally understands it now.
Sure.
She's in Las Vegas, by the way. I've known her for a long time.
Great.
Yeah. So is retail dead?
Retail is good question.
Certain types, maybe.
Certain types.
We talk about clothing's no good, right? Those stores are not the best, right?
In certain markets, the shopping mall is still the thing to do. And people still love to get out. Americans, I always say one of the best business ideas in the world is public storage, because Americans have a real thing about consumerism. We just love to buy too much stuff, and it's in our DNA. And the fact of the matter is, as a retailer today, you either have to provide a cost experience or you have to provide an experience. If you're not going into a retailer and you're getting the best price, or you're having an interesting experience in the store, there's no room for you anymore. So retailers are trying to figure out how to get creative to make the shopping experience interesting. They also have to, again, as I say, have an omnichannel, very cohesive omnichannel approach where you can buy something online but return it to a store. trying to integrate all of these things. Those who do that successfully will stick around. I think there's always new concepts. I remember seeing, especially when in New York City, there were online concepts, like clothing concepts that started online. And once they built a certain following, they started doing pop-up shops where they would lease space for just 3 months. They wouldn't fully commit a 10-year lease or the whole idea of a set, store strategy. But because there's vacancies out there, they say, let's just open a pop-up and let's test how we do with a storefront. And I think it's very interesting to see these things go both ways. Some concepts started off as brick and mortar storefront retail, moved to online, but you see it going in a circle in a lot of places, situations where online retailers are taking on a storefront presence. So I don't think it's dead. I think some people have to change. I think some concepts are dead. And I think some formats, the enclosed shopping mall in certain markets, if it's 30 years old and the management hasn't spruced it up, nobody wants to go there anymore. And you're seeing, but they're typically great real estate in the middle of town. And so what you're seeing is companies like Amazon buying those spaces up and creating sort of last mile distribution centers, et cetera. So the interesting thing is we thought that the world would look like a nuclear apocalypse after the pandemic over the past year in terms of just all this crazy vacant space. Deals would be cheap, and there was a lot of money, people drooling with funds, institutional players with a lot of money waiting to pounce on all these opportunities. And the fact is, it really hasn't played out that way, and to the extent people thought it would. There's a lot of competition for a nice enclosed mall location. There's a lot of things you can do to repurpose it, whether it's Amazon or multifamily. So but it's in motion.
I want to go back to your storage unit. So what you're saying is buy a storage unit, please, or build one.
I think my top 2 business concepts: name a star after someone. I don't know if you ever see those radio ads where you can name a star after someone. What a great business concept. You carry 0 inventory and you have infinite inventory. The next best concept, I think, in the world is public storage. It's phenomenal.
As soon as they build them, they fill up. And
they fill up. People tend to be lazy. They say, I'll go out there next week and clean it out. They never do. And these guys just collect a month. They hire one person to sit in an office and they print
and live upstairs.
That's a great, great concept.
Yeah. All right. Well, we'll have to work on that. Get some more in my town because there's only a handful of them, and I know they're full. And they added on to another one, and yeah, that's and then they also sell everything. So then you have all these storage people coming in to buy all those units when they don't pay their bills, right?
Correct. And then they're well low, and then they're in spaces that really nobody else, like traditional retailers, don't want these. They can go into spaces behind a shopping mall. You kind of have to fight to get to them if you've ever been to a public storage unit in some cases. So they can get cheaper real estate, which really improves their margins.
Right. And they can be further out. They don't have to be right there. They can, because the further out you are, the cheaper it's going to be for your storage. Now we talked about, okay, so overall, no one's going to see this huge, apocalypse of all these places for, we're hearing all these stories, all these big companies are not going to have their people come back in. Those things are different. We're not talking about commercial buildings. We're talking about retail space right now. Right. So
yeah,
we're talking about retail. Retail is basically there's going to be some places close and then other places take over for them is what I'm hearing. It's not completely dead. And I think, right.
Yeah, it's not completely dead. I mean, you look at the obvious thing, though, close, what you just said, people are not going back into the offices. I think some people are really eager to get back into offices. I have sort of a swinging pendulum philosophy about life. Things always seem to come back around. I think some people we could be at the dawn of an age of elegance where people are wearing suit and ties again because they're sick of seeing people in sweatpants. Maybe not, but I wouldn't count a retailer like Men's Warehouse out the way I might have 6 months ago. I think, I hear stories from people who own Men's Warehouse stores that they're doing great again. And I think it's very regional. We have people in California sort of have more of a, dare I say, Californian conservative in the same sentence. Coastal California, at least, think that, everything's shut down, but then you go to Texas and you would never know there's a pandemic. Everything's open and people are shopping out in the shopping mall. So it's also the perspective is also very regional.
And same with Florida. They've been open too.
Yes.
Yeah. So yeah, I could see the whole. I say it was going to be a 3-year cycle. People overreacted, stay home. They're not going to come in. Then the next year, part of them going to come in. The final year, everybody's going to come back, and it's going to take off like it. It just everything has a cycle. I mean, it always does.
And Americans have. I'm sorry. Americans have short-term memory.
Yeah, that too. Yeah. Otherwise, all the actors and actresses who mess up wouldn't be back on the films a couple of years later.
That's right. We love this story of the downtrodden one who made the big mistake, and we have great compassion and forgiveness, and we love to see them rise again.
Well, that's good, because that way if we mess up, we could rise again too. So
there you go.
Right. All right. So it sounds to me like we need to talk offline about a couple of investments down the road. But now, what are you seeing where you are right now? Because you're in Long Island, right?
I'm out in the lovely Hamptons, and I'm actually seeing birds in the trees. But I'm seeing some caution. People are again. This is a regional thing,
right? I understand.
There's more caution here than the stories I'm hearing in Florida. People are. It's kind of when you go out to eat at the restaurants, you have to wear the mask until you get seated, then you can take your mask off. People, there's a nightclub here where you have to show a vaccination card.
Really?
And so, this is tricky, and it's regional, and it's going to be a little while before things get sorted out. But I'm always impressed with the innovation, and again, the short-term memory. I just feel this place is about to explode with the summer crowd coming out. It's going to be a big season out here. There's no availabilities for rentals in the Hamptons anymore. And the sales of properties out here have been through the roof for the last year.
And if you look from California all the way across the United States, the housing prices and housing costs and everything has been pretty crazy. I mean, if you were in San Francisco, you were buying a place somewhere else to live, to be, not be close to everybody. If you lived in like where I am in Modesto, people were leaving here going to Sonora, which is up and towards the mountains. They're trying to get away from people. And that's why I was talking about a 3-year cycle. Everybody's leaving the city, and then in about another year and a half, they're going to start going back because they're going to be commuting, and they're going to do this, and they want to be closer to work, and they want to do that. So I think it's a 3-year cycle for me. That's what I'm looking at. But California is, we're supposed to be open June 15th, according, closer we get to the recall. We're going to be, so when we get open, I think it's just everybody's going to be out. Like, this is the first weekend, right? They said this weekend, more people are going to be traveling Memorial Weekend than any other weekend up to this point, since we through the pandemic. So I think that 18 million people, it's just going to be crazy. And I think that's the start of going forward, how we're going to see more and more people out doing things and things growing and not forgetting what we just went through, but not really worrying about it as much.
Yeah, I can tell you in Manhattan, again, 6 months ago, Manhattan was this dangerous ghost town. Everyone left Manhattan. You'd hear horror stories, and And I was thinking myself, wow, what a great time to get in on an investment, buying something, a starter 1 bedroom in Manhattan. But those days already sailed by. They're getting like record rents again in Manhattan. A friend of mine was trying to find a place in Lower Manhattan to rent, and she said it's almost impossible right now. So again, I'm really encouraged by how quickly things normalize, because again, I think we got into a mindset after a while of sitting at home and hearing all the stories in the media that the world was just going to hell. And you look at New York City, and it is just, people are out in the streets. It's like Roman days. People are going crazy there, having fun, and everyone's coming back from their parents' houses, and they're going back to they're going back to work, and they're trying to get back into apartments that they can't afford.
So it's like normal.
It's normal. Beyond.
All right. So if you were trying to buy a bunch of stuff real cheap, it's too late. Move on. Future retail space in the United States is going to continue to grow in different ways. It's always changing is what I'm hearing. And it's no different what we went through with COVID. It caused some things to happen faster that was in the works already. So anything else you want to add on there, Joe, before we leave?
Yeah, no, I'll just say the one sort of, obvious trend as far as what we call retail, we include restaurant, quick service restaurants, fast food restaurants, you may call it. A lot of the space is being absorbed by more food concepts, because people need to eat, and a lot of food concepts are thriving right now, and especially if you have a drive-through. And a lot of investors, they tell me, I'm only going to buy a deal that has a drive-through, because they saw what happened. Those who had a drive-through over the last year most of them made it very well through the pandemic. Those who did not suffered badly or aren't here anymore. So that's kind of a big trend. And look out for some of these companies like Chipotle, who are just doing tons of stores. Dutch Bros Coffee is going crazy. I keep mentioning them. They're a cult following. They do incredible sales, and they're opening like crazy. The dollar stores, my friend who's the VP of real estate at Dollar Tree told me they're going to be opening probably 400 more stores this year. So from my view, retail's not dead.
Right. Well, as we just said, it just depends on the concept, but it tells me that if you're gonna invest in it and buy one of those, make sure you're investing in a building that has a drive-through.
Yes.
Right. Because even if it was a store, you could still sold your stuff through the drive-through. Here's you go. This is what you're looking for. Right. Just come back tomorrow and return it through the drive-through if it doesn't fit.
That would be an interesting concept.
Well, we have the drive-through dry cleaners, right?
That's right.
And in Texas, they have the drive-through liquors. So, I mean, there's a lot of concepts. So
my mother, who used to like to shop with the ladies at the Lord and Taylor store, would be rolling her eyes massively right now at this concept.
Right. But I mean, the last time we had something like this was 1910, 1920, when we had that flu at that time, the last pandemic. So, we never know what's going to happen. And Joe, I really appreciate you coming on here and talking a little bit about the retail space and what's going on with it. I really appreciate it. And would you be willing to come back, 6 months from now, talk about it again?
Absolutely. Love to.
Okay. All right, Joe, stay right there. And everybody else, thanks for tuning in, watching, and we appreciate it. If you're on YouTube watching this, please make sure you like, subscribe, and share. Thank you. And we'll see you again on Tuesday at 11 a.m. Again, Joe, stay right there. Thank you so much. And there we go.